Hello. Good morning, good morning. Good afternoon, good evening. Hope you all are doing beyond fantastic. And let's jump right into it. I like to jump right into it. So let's go here on the daily time frame. Actually, it's probably like on the weekly, right? Because this is what I was talking about yesterday. So I believe the audio should be good. We should be all set up over here. Welcome, welcome everybody. Welcome, 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 welcome. All right, so this is what I was talking about yesterday, if you recall. That the weekly was just creating a top wick. Correct? And you know, the thing is, because Monday we had weekly create the top wick. Correct? And at the same time, we had a lot of like fundamental work that was leading to gold to come down bearish. So this is partly like some of the reason why we're looking for we're kind of looking more for sells here on gold. And don't forget, we also have the 4,000 psychological mark right here, which is going to be a potential target, right? So we got this as a potential. This is going to be the weekly target. I believe we can most likely get down to 4K, and it's really not that far off from where we currently are. We're only looking at around 268 pips of a move down. So this is what that I'm expecting price to do. Right? This is what I'm expecting price to do. I'm expecting price to come back down to 4,000 psychological, as it's going to be like a magnet for price. See. All right. Hi everybody. Hi Wish Rory. Hi all from Perth, Western Australia. Welcome mate. So we got Apex in the chat. Good morning Basti. We got Disc in here. Hey, join today and watch the mentorship videos. Oh, amazing. Write something in the Discord. We're live in the Discord over here. Write something so I can see your username. Yeah, but welcome guys. Good morning everybody. Morning Ricardo. But look at this. This is the range I'm looking for. This is what I'm thinking. Like we're gonna most likely gonna be anticipating sells today. And also, if we just look at the overall structure on gold, we have been moving more bearish. So we've been creating sort of like these lower high. We got a lower high here. We got another lower high. We got another lower high. And this was just the previous higher high that was formed over here from this previous bullish trend. But if you notice, we're no longer moving up anymore. Right? We're no longer moving up anymore. So the current trend on the weekly time frame is more leaning towards the downside. But if we break this down further, what we're looking at here is we have a support area, and that's going to be at the weekly target as well. Correct? So that's going to be where that 4K psychological mark is going to be. And we've created a few rejection wicks. We got a few rejection wicks over here. So this is something that you'll see just like yesterday's, I believe it was yesterday's positions, right? We call this a false support. We call this a false support right over here. You might be thinking that these rejection wicks are going to hold. We're most likely going to move through them. Most likely we're going to move through them. And how do we know this? By focusing on the macro news. Right? Because now everything is leading to being more bearish. You can see on the current trend, and it is going to be leading to be bullish like we previously were. So it's quite important to understand this this overall context so you better understand where the volume is going. So you're going to get the volume direction. Now, it doesn't mean we're always going to be looking just for the sells, because obviously we can have some pretty nice buys on the LTF on the intraday time frame. But we want to be more in a position that we can take a sell, because that's going to give us very good moves where we can maximize gains and get strong pushes like we had yesterday, where we took that consolidation breakout. For those of you who stayed towards the end of the stream, then you would have seen it. Exactly what we're anticipating over there. We had a huge waterfall just because of, you know, anticipating this. So it's quite important not to be impatient in the market. I think being impatient is what causes you to miss out on a lot of learning opportunities as well. So what we want to see is if price can most likely break through this level. I believe we can do it by maybe crack it. We can most likely crack this. By the end of this week. We can most likely crack the 4,000 psychological mark. by the end of this week. We'll crack 4K. That's what I believe is going to happen. And especially if the fundamental space stays relatively the same, even with the truce that we had yesterday, that was kind of moving gold up, we know that's a short-lived event, right? So most likely going to crack that 4K psychological by week's end. And then for the following week, I would be expecting further downside. So we're going to have that next weekly candlestick open and price to potentially start moving down like this. And if it starts moving down, now we got to ask ourselves, what's the next target going to be? Right? And here we go. We got the next weekly target by support. And guess what? Guess what? We got the next weekly target here by, what is this? 3,300. 3,300 psychological. So that's going to act as a magnet. When price finally breaks 4,000. Now, I'll show you this again in the LTF. It's what I spoke about yesterday when we're anticipating that Asia range to get corrected. So have all this in mind because it's all going to be useful information as we're still anticipating the LTF analysis, correct? So have all this here in mind, right? And you're going to see how that also played out beautifully on yesterday's position as price came to fulfill the Asia session range. However, you know what happened yesterday? It kind of chopped a little bit though as it came down. So it would have been a little bit more tricky to get like a full-on runner, just mainly because of that chop, right? But this is the overall market condition, and this is going to be the most important level that you want to keep in mind. You can think about this as an institutional level here. At 4,000, right? You've heard of institutional levels, and these are places where you're gonna have rounded, most of the time rounded digits. I gotta change my hotkeys. Sorry if it's playing some kind of sound effects. I gotta go change my hotkeys. Let me set on yeah, man. Like people hate on people. Wait, damn. Like people hate on digital watches, but man, let me tell you, this watch right here, I can't even live without this watch. This watch, like I don't even know how that I can live with just a normal watch unless I'm just having a dinner or from holiday. I don't really care much. But on a day-to-day basis, been super productive. Man, this thing helps a lot because you just set a reminder. Every time an idea comes to your head, you never forget stuff. So it keeps you moving. You know, sometimes we forget things and then we remember them later. But when you write it down immediately, it like just keeps you moving. It keeps you moving. Which watch is that? I don't even know. Let me see. This is... How do you check this? It's an Apple Watch. I think if Apple, you know, Apple releases a new product every month. So I don't know if I'm already on an old generation, but this is an Apple Watch. It should still be the new generation. I don't think Apple Watches come out that much. But you never know, man. With Apple, you're going to buy a phone today and it's already released 3 more phones in the next quarter. But now I'm actually interested. Let me see. Let me Google this quickly. Are there any new ones? Oh damn! I gotta set up my hotspot here before anything, so I can get internet on my phone. All right, nice. I think it's on the Series 9 still. But anyway, So we got that most important level, institutional there at 4,000 psychological. That's what we're anticipating to crack. That's what we're anticipating, that price is going to get through this level. And guess what? This range here on the higher time frame, you're looking at roughly around there's going to be roughly about we got how many pips is that? Is that 5,000? 5,390. 98. Holy. Yeah, I mean that's a pretty big range. I mean, this is where the initial bull run was. If you notice right here, that's where we had the initial bull run as price was creating new higher highs. Correct? This is that previous accumulation. Right over here before we broke out. And you see that little accumulation play. And this is why we look at the markets the way that we look at markets, right? Because these are the three things that you're gonna have to understand about trending markets. Correct? You gotta understand what kind of market condition that you're currently in. So we've already identified the current market condition. So if we're gonna look at this, let's bear with the trading view here for a moment. It takes a while for some reason when you try and click on these things. I still don't know if that's a me problem. Let me know in the chat if you guys are experiencing this as well. It takes a while to click on tools. So these are concepts that are very, very important to understand, to pinpoint exactly where it is that the market is heading. Right? So that's how we call lower, for anybody still confused about this, that's what we call when market is moving bearish, creating new lower highs and lower lows. Lower highs and lower lows. So if market's going to be moving bullish, we already know this, but it's always good to refresh ourselves because even I too sometimes get confused by the abbreviations. And these are called lower highs or higher lows. Yeah, because this is a higher low. Higher low, higher low, and higher low. So we're going to look back at the weekly time frame. So what can we say that the weekly candlestick is doing? Right? So obviously that's where you're going to find the current weekly condition here. And then we're going to look at the LTF in a moment. But this is also the current daily condition. And you're going to see this very clearly now on the 5-minute time frame as we're having kind of a parabolic move to the downside, correct? So we're not having these conditions are usually the most require the most patience, especially when you're trading on the lower time frames. On the LTF, right? It's just similar thing. If you watch yesterday's move that we had, we took a lot of patience for this situation, whereby then we had the breakout and then we caught like a really nice breakout, correct? And it took patience. A lot of the people in the stream, I think like it was already like maybe a bigger portion of people had already left by this point, right? But this is an area where most people are also going to lose money when markets are consolidating. You know, maybe getting caught in fake outs, but these are the best conditions right here. Like we have today. To, you know, pass challenges, maximize gains, and have general, and have good PA basically. good PA which you can read, because you're gonna find most people are gonna be able to trade the market whenever it's moving like this, whenever it's channeling up like this or channeling down like this. Most people struggle, and this is when the market really gets majority of traders, the classic 89 or 87% of traders who fail. They're getting caught in this type of price action when the market is just consolidating, because you know sometimes it wicks up and then it fakes out, and it comes down and then it fakes up. But it's all just because it's stuck in a range. And another dangerous thing people tend to do in these situations is they start to draw trend lines. You know, they start to overanalyze positions, say, oh, this is a potential head and shoulders right over here. And they end up taking way too many trades. Actually, I remember hearing this in an interview, that this is where market makers make the most money off commissions. Because I have people calling in and they want to buy and sell at prices. So they make a lot of money out of the via commissions through these ranges. So it's actually sometimes for the market makers' interest to keep holding this. That's why they say 90% of the time markets are actually consolidating. And it's a reason why you won't also see huge fluctuations in let's say the dollar or the euro or the pound or the franc. You're never gonna wake up and find like a Bitcoin situation where one day it's so high, one day it's so low. It's usually stable, right? But also in the lower time frames, or when you're trading, it's easy to kind of trick yourself into usually believing that there's a lot of volume and a lot of direction, because it kind of looks like it, right? But there's certain tricks like the market, I would say, likes to play, especially when you look at the autonomy of a candlestick. You got the candle body and you got the wicks. Right now, the way that this body here moves is kind of like the way that we experience sometimes losing trades or finding it hard to stay on the bull, so to say, right? Because again, we'll speak about this fluctuation like this. Although it might look in hindsight that it's moving up, you know, it doesn't tend to move up always so cleanly. You know, eventually the candle will close and it can look like this. But when the candle was open, there might have been like a lot of psychological work that happened before the overall structure was built. So that's why it's good to think about markets in this sense, that like 90% of the time that it's consolidating, just to be on the safe side. So it's always good to be the best. You know, they basically say that the best form of offense is going to be defense. Is defense. So that's why it's also quite important to understand what kind of market condition that you're going to be in. The best form of offense is defense in trading, right? We don't want to be too offensive, because if we're too offensive, then we get into early, we get faked outs. So it's good to always be patient. I always say, like, it's better that you get into a trade late than you get into a trade too early. Right? For me, that's always going to be the best type of entry over there. A later entry is better than a too early entry. So yeah, that's currently what it is that's happening here as well on the weekly time frame. We've already broken this down over here, what sort of a market direction that we're heading. That's the previous accumulation that we also just quickly drew out, which we had over here before the bull run. So I think all this is going to be quite important to understand. You see, like, imagine trading this market condition, right? Just for visual purposes, I want you to really understand this, right? Imagine this. This is the weekly time frame right over here. Correct? This is the weekly time frame right over here, and price was ranging within 4,000 pip range. Correct? So you could imagine on the lower time frame how choppy that could have been. How many fake outs? I can already see the fake outs just from here. You know, we got one fake out here, we got another fake out here, and a lot of wicks. And the moment you see a lot of these wicks, you see all these wicks, that's danger. That's danger. Correct? You don't want to see wicks. But you see this? Look at how amazing this is. This is when now a lot more people are going to find easier trades, even on the lower time frames. You get such a market condition like that. A lot more easier even than the lower time frame. You see, because it's directional, a lot of wicks. Look at the structure. Looks healthy, looks voluminous. Then we had a bit of volatility here. I think this was news driven, this wick towards like 5,600. And mind you, again, this is another psychological mark. So this is why I'm saying these institutional levels, they're worth paying attention to. And that's why we're looking at 4,000, because look at the pinpoint accuracy on these levels. But you know, these levels, think of them like a zone sometimes as well, because you got like 5,500 here, 5,500 to 5,600. Think of it like a zone. But yeah, sometimes it can be super accurate and you're gonna get those I mean, this is right to the pip, basically right to the pip. But you better want to think of it like a zone, because when it comes to targets, especially like TPs, you kind of want to also be a bit more on the offensive side. You know, with TPs, I don't mind getting out a bit early as well. As soon as I secure something, I don't need to be perfect. You know, I don't need to be perfect. I don't need that take profit to hit by the pip. Man, I used to have these TPs, I remember, in year one, and it would miss by 0.5 pips, 1 pip. I would be happy to take a loss if my TP missed by like 1 pip or like even 0.5 pip, because the whole idea I was thinking was I need to control my mind and not tamper with the trade. So the TP needs to hit, which is kind of good training if you think about it. But like, if you really get now the experience of being in the market, you'll see the way that you learn about, for example, reading about learning how to ride a bike and actually riding the bike are two completely different things. Correct? Because now when you're actually in the market, you're going to see that you need to take and secure something. But let's see now. We're going back onto the daily time frame, because now we're done with the weekly time frame. Let's just get rid of all that analysis. Daily time frame is a little bit more straightforward. We're seeing a lot more accumulation here still. And now I want you to think about this for a minute. I got something really important here to show you. Ask yourself this question. Why is price accumulating at 4,000 psychological? Correct? What does price have to benefit here when it's going to accumulate at 4,000 psychological? What do you think the enemy is planning here? And in this case, you know who's more vulnerable? We got the sellers. I mean, the buyers. They're the ones who are most vulnerable. And the reason that is again, leading back to the macros. Buyers are most vulnerable here. They have more to lose. They got a lot more to lose. And if you just go up one time frame, you can see why that's the case. Look at this. Look at what will happen once they give away that position. What do you think this is going to mean for us going into next week? This is going to mean that whatever happened here, when we had that amazing bull run where most people are actually going to tend to make money in these situations, we're most likely going to have a pretty good period of selling that's on the horizon once we crack 4,000 psychological. And I believe this is going to be a time when you're going to be looking a lot for runners. This is going to be a time when you're going to be looking a lot for, you know, especially getting more easy passes on challenges. I believe that's when would be a good time to really set yourself up for success, right? So keep an eye out for that. As you know, we are still holding this 4K level. We really want to see this break because that's going to mean a lot of good things for us. Now, if it breaks up bullish, we're just going to have to see what the macros are saying about that, because if it breaks up bullish in the current state of things, it's most likely just going to be a fake out. So price may attempt to do something like this, and then it will just be a fake out, and that squeeze for the big push to the downside. Now you see why that the macros are so important to keep in mind. And we're also going to jump into this in a bit over here and see what the macros for the day are looking like. But for me, it seems that gold is moving down. It looks like oil should be moving up at this point as well. So it's just most likely going to be a waiting game. Disco, disco. Oh, disco. Is this you? Is your username Vloon? Disco. Yes, I'm Vloon. Oh, nice. All right, now perfect. Yeah, we got a liquidity grab right there. That looks like break below structure. Small little liquidity grab. Just took out the lows. This is a pretty good giveaway. Like, especially once you see this and you're looking for those buy confirmations, this is perfect. It just took out this low over here and then started wicking back up, and you see how price kind of shot back up. It's kind of spring back up. I'm not sure what time frame that is, but that's a higher time frame. Beautiful confluence for getting in like 1 minute or 5 minute entries. That's exactly what I want to be looking out for too. But you see, as of right now, that's a daily. Daily here just accumulating, moving sideways. Weekly candlestick has already fulfilled the top wick. Retested the 8 SMA, flipping back down right now. We're cracking through that 8 SMA there too on the daily time frame, which is also a good sign. So we're cracking below. Cracking below psychological support. Eight SMA. Have this is going to be like your dynamic support levels. Right? So we're cracking below dynamic support, which is also a psychological support. All right. But now you see, the thing is with a daily time frame, if we investigate this a little bit more, what do we notice? We're coming towards a sort of demand zone or demand area down over here, which actually has good confluence. You know, you wouldn't be wrong for thinking about taking a buy here. You know, some people would be looking to take long positions because of the fact that, you know, we got 4K, we got a huge demand zone area over there. We got triple 1, 2, 3, 4 bottoms. Trading view still lagging, so slow. Look at this. Anyway, yeah. So you're gonna most likely see more buyers come in like this. And what do you think is gonna happen when they do this? That's gonna give us an amazing opportunity as a seller, because I'm more bearish. I'm more team bears at this moment. So it's gonna give us an amazing opportunity to use their liquidity. Because remember, for price to move down, we need to have buyers in the market. We can't just move down if everybody is moving down, because it's not in the interest of the market. We need to still have a good amount of willing buyers so that we can keep pushing down, right? Because this is what they call, in a sense, a zero-sum game. Somebody has to lose money, so somebody else makes money, right? But now we're just hovering around 4K and 4,200 psychological, pretty much. But you know the thing about this, since it's such a big range, like 2,800 pips, there's a lot of like movement on the lower time frames, correct? So this might look bad on the HTF, and if you ask a lot of like higher time frame traders, they would not like to trade in a position like this, because you know most higher time frame position holders, especially like position holders, guess what? Their stops are like really big, 1,000+ pips. Right, so this whole time here, you can imagine for how long that they've been stuck, since pretty much June 26th. We're now in July 26th, so like a whole month here just stuck in a range. You know, so that's just one thing about position trading, is you tend to get stuck in ranges, because most of the time, remember what we said, 90% of the time the market is consolidating. So if you're gonna be a position trader, you're gonna have to take on maybe like a bigger risk to make it worth the while. That's why I sometimes see these position traders, they take like a big risk. They're gonna take a risk, you know, like $40,000 most of the time that I see, like the ones that I follow, at least on social media, 50K, 100K. And that's the way you play it. Take a big risk, but it's gonna take time to play out. So we find our edge in not wasting time. Remember, we don't want to waste time. We don't have time to waste, right? Can't be sitting around waiting for that to mature, unless I'm trading millions and millions of dollars, correct? So we're gonna look for further ways to scalp the market on the intradays, which has been the most lucrative way for a lot of retail traders. Especially in terms of learning, you learn a lot faster when you get that PA. So if you look at the 4-hour here, pretty much it's the same story that we're getting, that we can see on the daily. So we have a 4-hour support right here we just tapped into. Now remember the market trends we're talking about. So if you notice this, we have equal highs. We got equal highs, equal highs. Well, this one, it could be an equal high because this is going to be now what we're looking at, which was a similar market condition we had. I think today is what, Tuesday? Was it Monday? Or was it last week? Last week, Friday, we had this as a range within a range. Range within a range. So you see this, we got the broader range above here, which is like 2000 plus pips, and then we got this smaller range down over here. So this is what we're going to call the equal lows. We got equal low here. So it's important that I'm drawing this for you guys and I'm taking my time with this for you, because for me it's obvious, but for some of you it may not be so obvious when I talk about these things. So you got to see where that the eye is looking, right? So this is where that I'm currently looking at. These are the equal lows I'm looking at. These are the equal highs. Actually, you could even like move this a bit here. So you got that equal lows, equal highs. So if you notice something, what does that typically tell you? What does this tell us? What does equal range within a range? What does a range within a range tell us? All right, let me see if anybody gonna get this. What does a range within a range tell us? Write a comment in the chat. Let's see if anybody gets this. What does a range within a range tell us? This is why it's important to learn. It's important to learn how to read naked charts. Correct? Liquidity. Nice shot. Nice shot. Yeah. Definitely somewhere around there, but we're looking at compression, right? It's telling us price is compressing. Price is compressing. So if price is compressing, what we typically know about compressions is it leads to breakouts. Compressions lead to breakouts. So the more that price is compressing and getting smaller, it's the same exact way that when you look at a trend line, when people draw a trend line like that, then the more it gets tighter and tighter and tighter, then it's gonna lead to the breakout. Right? So this is a good sign that we're seeing this little bit of compression here, because what I think is that the next time price comes to these lows, right over there, we're most likely going to see a breakout. The next time on the 4-hour, you said that's a 4-hour. The next time we come down to like, we crack first of all 4K psychological and come retest these equal lows, which also these are equal lows here from the higher ranges, right here and here, that we're most likely going to break out. Right? It's important to know, chat. Keep this in mind, because next week, I think most likely next week, we're going to be hovering around these levels. So this is when we gotta have to get prepared for big breakouts. This is when that we're gonna have to get prepared for a possibility of seeing markets moving and not getting FOMO. Because sometimes when you don't know why that the market's moving, you're gonna feel like a lot of FOMO. Because you feel like, oh man, the market is rushing right now. I'm not exactly sure why, but if you preempt it and it happens, you don't have FOMO, because you remember, you're just trading that one day. At the end of the day, you just want to be taking 1 or 2 trades, maybe 1 or 3 trades. Even though we have a whole weekly range to fill below these zones, it doesn't mean you gotta FOMO and do it all at once. Like, even if price fills the whole range or like half of the range like this in one day, don't feel FOMO about it. That's the last thing. You always want to remain control in the market, because guess what? You never really miss a move in the market. You're always going to get your opportunity. And trust me, if your trading career relied you on this analysis over here, then you wouldn't have a long trading career in the first place, right? So this is just like the moment that we have what we call is like a sample size. A sample size of a potential move that we can get. Right? This is a sample size. That's all it is, Chad. And the more that you understand these different samples, the better and more patient you become. The more patient you become, right? The more patient you become, because you're not afraid of missing moves anymore once you understand that. Because remember, we broke down the different types of market conditions already. So you're gonna be very well equipped to trade any sort of price action on any day. But trust me, this is gonna be very, very nice. That's gonna be an amazing opportunity soon. All right, so that's what we're looking at. So if the 4-hour time frame here is at support right now, we got about 2 hours 20 minutes for the candlestick to close. Technically, it does have room to move up. Let's say if it's not ready to move. There's also another range within a range right over here. Again, we have another equal high. We got another equal high. And we got these two equal lows. So this is what we're currently holding here. It's about like a 1,000 pip range. Correct? So again, remember what this is leading towards. Especially if we can get this candlestick to close, and then it's going to solidify that support, and we've got like two equal lows right here. Right? But this candle needs to close for that whole structure here to be solidified. And remember, what does compression mean? Leads to breakout. Correct? Leads to a breakout. So if we would like to get this 4-hour close here, I think even later during the day, maybe a few hours into the New York session, we might even see a continuation. The daily is already down about 1.16%, but we can definitely see like even 2% as we're coming down towards 4K psychological right over there. Most likely we could still see like 2% and 4K psychological. As it's compressing, we're going to get a big break, and then we're going to expect much, much nicer moves. All right, the 1 hour just going to give us a little bit more detail. I feel like it's a little bit closer to the 4 hour. I can just see on the 1 hour here, we just had a small little breakout from this area. This is a small little accumulation that we had, a little accumulation breakout. So remember like how we spoke about trending bullish conditions, and then we spoke about bearish trending conditions. People usually get confused, and also consolidating markets. People usually get confused by just applying this on just one time frame and thinking that's just the way it is. But you see, as we're heading down further, we're gonna have different trends. We have different trends. This is where people tend to get confused now, right? So if you identify this area over here, the accumulation, that's what we had pretty much here on the hour before the breakout. And that breakout happened during London. That was about on the third hourly candle of London session open, that we had this market condition. And guess what? Understanding that market condition, and this is why it's important to take notes, because everything I'm explaining to you, you're going to see come to fruition, because this is what we call market structure. Markets have to follow rules as well to some extent, right? It's going to break the rules from time to time, but market structure, it should follow the rules. From most times it should follow the rules, correct? So as you can see right over here, what happened right after we had that small little accumulation? What did this lead to? It led to a volume breakout. Now, is there anything different from this and what we spoke about on the daily and the weekly time frame? There isn't, because markets are fractal. right? So there's no difference. Everything that you're going to explain on the higher time frame, it might seem like a really big and intimidating time frame, but candlesticks are candlesticks. They're all going to react the same exact way. It's just on the lower time frame, we got an opportunity to trade them a lot faster, right? We can take advantage of them a lot faster. That's what I love about being able to read naked charts, because you can trade the same way you trade on the lower time frame if you want to trade the higher time frame. And we've called out insane Bitcoin runs. I called out a Bitcoin dump, you can see on my Instagram, to 15k. Literally called that 15k dump with a head and shoulders reversal by 60k psychological, and then the rollover. Correct? Just because that's just the way that the market operates when you understand what kind of levels that the market is going to be looking to target, right? Based off the overall context of the instrument that you're trading. So with Bitcoin, of course, that's a squeeze, that's a rug pull situation. So we can anticipate via looking at it from that perspective. With gold moving down, macro news, US-Iran tensions, Donald Trump's volatility, we're going to analyze from that perspective. And each instrument is going to have its own macro fundamentals that are going to affect it, that you're going to use technicals to back to find your entries, but you'll get the direction from, they say you got to keep your ear on the street in Wall Street. So you got to always keep your ear on the street. That will give you the overall institutional direction for price, or like smart money. But you see, markets are fractal. You see that breakout there? It's not an accident that we're gonna have like a volume breakout like this, right? Just the same way, it's not an accident that price came down to 40.20, because we have a support here and had a reaction. Because that's why we always say that these are gonna be the profit-taking marks. And we're gonna see as we keep going down, we're gonna see what kind of a profit-taking marks we're gonna see for potential positions that are about to be executed. All right, but we got a profit-taking mark here by support, because again, the market is just telling you it can move. Once it starts to break from here, it's gonna move from here to here. You know, the thing is, we haven't even got to confluences yet. We haven't even got to confluence. There's so much that we can apply to such a position like this. It is insane once you start seeing the power of being able to actually read the charts and to be able to understand how moves build up and how moves play out. It is insane. Insane. Right here, I can already see several confluences. And you know, the thing about confluences, you don't want to have too many, right? Because if you have too many, it's hard to remember them all. It's hard to remember them all. So it's going to be more difficult for you to be consistent. So we typically say if you can at least have like 3+, your go-to confluences, I believe those are always going to give you like some sort of some kind of a confidence in your trade setups. So here I'm already seeing a few. We're seeing for this breakout, we got liquidity. We got a liquidity grab. We got my 8 SMA over here holding down. That's again what we call the bully SMA. Got the bully SMA in there. What else? We got just from looking from the outside. We got a previous SMA crossover. So that's basically the one that happened up over here. See how the mouth is looking down like this? So that's usually showing us the direction. Because whenever you get market, for example, moving bearish, most of the time you're going to see that the mouth is going to look something like this. It's going to be facing down. And the same way as when price is moving up, the mouth of the SMAs, they're going to look something like that. They're going to be pointing up. And here they're going to be pointing down. You can see we got the mouth currently here pointing down as well. Nice little breakout from this area too. Again, back to this market condition. You see, that's why when you talk about higher highs and understanding lower highs, and overall market direction, you're able to pinpoint this trend not only from the higher time frame, but also the lower time frame, without the analysis paralysis, without the confusion. Oh, nice. Yeah, we got Paris over here mentioned a quite important one. We got also clean range. Look at that. Amazing. Beautiful. We got clean range. Look at that. We had clean range. That's my favorite one right there. Clean range. Look at this. For this move here. And we also had clean range for this move all the way up over here. Nice. Awesome. Rainsy in the chat. Welcome, welcome. Yeah, long time no see. Oh, guys, drink some more water. Stay hydrated. Clean range. That's what I like to hear. When you say things like this, man, it makes me feel good. It makes me feel that you're listening. Is Fibonacci bearish engulfing H1 still valid? That's another confluence. You gotta see, okay, so if I'm gonna use Fibonacci as a confluence, how good of a confluence is it me to always keep in mind the Fibonacci? Right? So that's a potential you can use if you see a lot of structure. You see the whole thing about a Fibonacci just shows me market direction. So you want to use a fib as price is moving up or moving down, correct? But you never use a fib when market is moving sideways. You never want to use a fib in this condition. So what you essentially just try and catch with the fib is a retracement into the golden zone, preferably that it's lining up with a structure, maybe like a break and a retest, like this, you know, the same way as here, using a Fibonacci, golden zone, preferably lining up with structure. And you can still use confluences of the fib. Sometimes you also get the SMAs in your golden zone, but then you got to know how to draw the fib. I feel like a lot of people also don't really understand like how to draw a fib, right? How do you draw a fib? How do you draw a fib? You have to draw it from where the push starts. And also, keep in mind the clean range it makes from the push. So in a situation like this, if you're seeing like a clean push, like let's say you're gonna have volume candles follow each other, like even like it could be like a big candle like this, and then it starts to create your resistance points. You're gonna have a resistance like this. Preferably the first candle has to first close, right? So it solidifies the resistance and then starts to come down. And as it's coming down, you already got your fib and you're drawing it from this low up to this new high that's created. Again, got a higher high and you got another higher high. So the whole idea is that price is going to come retest a key level like this, where you might have a few confluences line up. So you're going to have in this scenario, let's say you might have an SMA over here. You're going to have your break and your retest level, and again you're going to have as well your golden zone, the 50 and the 618. Right now, the thing with the fib, it's interesting because there are a few ways you can use a fib. Some people, they're gonna get in immediately like this as it comes spikes in, because you know sometimes when you're looking at Fibonacci retracements, price can just spike in shortly and then thereafter just shoot up like that. So you get kind of like a wick entry, correct? Or you could wait for a lower time frame confirmation. Maybe let's say if this is an hour fib. Or let's just say this is, let's go ahead and say this is like a 15-minute or a 30-minute fib. So you're looking for an entry confirmation on, let's say, the 5-minute. It could be on the 5-minute, or it could be on the 3-minute time frame. And those entry confirmations could be anything that, you know, that you think is going to be good, such as it could be an engulfing candle stick that you will see within the golden zone. You just need something, right? Because now you got all your confluences here. But you might be wanting to see a bit of structure first form. Like, because if you go on the lower time frames, guess what the lower time frames are going to be doing? The lower time frames are already going to be switching the structure up. they're already going to be creating new higher highs. So instead of waiting, right? And a lot of waiting sometimes leads to missing the move. You're going to see it on the LTF already. Price action is changing, creating new higher high structure, and then you're going to find your way to get executed in. Could even be a consolidation break on the Fibonacci. TFX entry, consolidation breakout could be on the Fibonacci. All right. I find that the best fibs typically would work on the, let's say from the 1 hour to the 15 minute. Those are the best time frames. Those are the best time frames to be using those on. All right, chat. So we're just actually about to get the, the New York session here open up soon. So this is while monitoring. I see Asia has been moving down. We got the daily candlestick has been moving bearish. I've already identified my trend. The price is creating new lower highs. So we got a lower high here. We got another lower high here. We got another lower high here. Oh, let's see. That created a new higher high, but that was a bit of like a fake out, I would say. I'd say overall, let's adjust this. Let's adjust this to accommodate the overall structure a little bit more. Right? So this is it. This was just a big liquidity grab that happened over here. That's a huge liquidity grab that happened over here. Price is ultimately creating your lower high. And you can even sometimes, if you want, a nice little trick is change it to a line graph. If you find it easier to identify market condition that way, because it's just a line. Sometimes you're going to see like the candlesticks. Sometimes the candle can confuse you a little bit, right? But if you just use a line, then you're going to see like, okay, what direction is this line overall heading towards? You can see lower high, lower high, lower high. It doesn't have to be perfect, right? You don't always got to like quickly assume that this is going to be the new higher high right over here, because those are sometimes just fake outs. Like situation like this, just a fake out. So we could like almost ignore this unless only if price had broken a level like this and then continued to do that, right? But you see, it didn't continue to do that down here. So we're just gonna accommodate this as a lower high and just look at this overall area like that. Overall area here, overall area here. So you see that we're still in the process of rolling over, right? We're still in the process of rolling over with that daily coming down throughout the whole of Asia session. So Asia dumped around, was that like 464 pips, pulled up, fake out, liquidity grab by the highs. Huge waterfall as well. And guess where this waterfall came into play? Because you can always have several market conditions in one, right? You're getting lower highs being created, but at the same time, on the minor time frames, you're getting accumulations. So again, here you have your consolidation. But this is kind of what we like to call an accumulation at inception. Well, let's just say consolidation at inception. So you got consolidation at inception. Daily candlestick is bearish. Negative, actually we're down negative 1 point. Let's just call it 30 plus, right? We're pretty close to 30, but let's just say like 1.20 plus. Because that's going to always be shifting. All right, we got consolidation at inception. We got our breakout here. TFX entry confirmation. And that breakout happened around 20, what is this, like 1 hour, 2, 3, 4, 5, 2 hours, 2 hours, 30 minutes into the London Open. We started to have the breakout here. The price broke down. We're seeing a lot of push to the downside. Mind you as well, this is a new lower low that's being formed. Don't forget about that. We got also a lower low here. Price action and direction is heading more bearish, right? I currently see my 8 SMA is also holding price at this moment, right here. And for me, I'm fairly confident. I'm fairly confident in looking at sells. So I'm going to jump onto my order flow now and identify when the market activity is going to increase. Now I want to identify how the market activity is going to increase. Right over here. You see this? Look at this. Does this look like market activity to you? Does that look interesting? Does that look interesting? I think that looks pretty slow. It looks pretty slow to me. So what am I going to do? What are we going to do when market activity is slow on order flow? We will wait because we set the rules. Because we set the rules, not the market. Because the market will always show you a time when to trade. But we got to understand when is the best time to not trade. When is the best time to not trade? That's what we got to identify over here. So for me right now, I think this is going to be a pretty good time that I'm not going to touch the market until I see some kind of a confirmation, right? Some kind of a confirmation. Are we going to move up? Are we going to move down? And if price starts to move down, naturally, we'll have a higher probability of catching a sell. If price starts to move up, we'll have a higher probability of catching a buy. But since now I'm expecting overall market structure here to be bearish, as we're creating new lower lows and lower highs, I kind of want to lean more towards a bearish move. But we're not going to completely forget about potential sells. I mean buys. So let's dive into this a little bit further. Let's get a little bit more detail of what's actually going on here. Remember the market trends we spoke about earlier? Equal high. Look at this volume coming in. We're down negative 350. We got equal highs and we got equal lows. Equal highs and equal lows. Price is getting ready to break out. Price is getting ready for a breakout at NY Open. Now we're back to the lows, flirting with the lows. Got a 5-minute candlestick here that just opened. It would be nice if we get a new 5-minute open. Actually, if you go on the 5-minute, we're having a bit of a head and shoulders here. That's the left shoulder. This is the head. And this is a right shoulder. So we got a head and shoulders confluence on the higher time frame. We got a head and shoulders confluence here. on the HTF. What else do you notice as a confluence? Range within a range. Markets are compressing right over here by the right shoulder. All right, here again. Equal highs. And equal lows. Look at that. So, you know, the breakout could even be coming in sooner. You see, the thing is, if the order flow flips, because if you look at the hourly just opened up right now. It could reflip, break its highs, and guess what will happen? We have all this clean range here on the left-hand side, right? So if we say order flow flip, there's a potential that the hourly could start moving up. Maybe this hour doesn't give us a sell. Maybe it moves up. Look at how much range we have for the hour to move up if it decides to move up. So the way we can anticipate this is by monitoring what price is going to do at these equal highs. Right over here. So that's our range within a range. So I gotta lock in here. Order flow wise, I'm still not seeing it. I'm still not seeing a good confluence. I'm still not seeing a good confluence. I'm still not seeing a good confluence for buys yet. Market activity has increased slightly, but still nothing too interesting. That hourly is about to flip though. So you could still have some potential buys coming in somewhere around here. Let's see. Oh, we're just like a doji. So I'm not getting in yet. You see, that's how I'm going to avoid a fake out. Because that could just be a liquidity grab there. So I'm going to anticipate and see if this move is going to be like some kind of a liquidity grab. Because I'm still not yet fully convinced about the move up yet. I'm still not fully convinced about the move up yet. But it's right about to flip. Delta is right about to flip. Where you can see we just kind of spiked in there. It could be a play on volume. And the market could be looking to get some liquidity. Right over there. That's what it could be doing. It's just looking for liquidity. Because you see, as price moved up, we actually had a little bit of absorption over there. We actually had a bit of absorption. So that's a good sign. That's a good sign for when we start to come back down here. Let me move these just a little bit lower. Because you see, the thing is, in a situation like this, if you're not too confident about the buys, you got point A right over here, and you got point A right over here too. This whole region is just one big point A. And price is going to eventually move out of this. It's eventually going to either break above this zone, because in hindsight, you're going to be looking back, and on the lower time frame, this is what you're going to see. Or price is going to do something like this. When you look back at it in hindsight, you're going to identify this area here as a point A of where that higher time frame move came out of. And that's why it's so important to understand how that the lower time frames work, because they give you such an immense edge in getting a much better stop loss. Right? A much better stop loss to potentially maximize gains and get more refined entries. You have news in 9 minutes? Yeah, we should be having what is this? We got consumer confidence at 10. No, but this is at 10 a.m. not 9 minutes. This is gonna be at 10 a.m. I don't think we're gonna have too much. All right, gold falls on firm dollar spotlight on Fed rate decision. So this is another confluence that we're looking. Look at this. TradingView gave us another confluence that we're going to use for potential sells. If it could just open up. Taking its sweet, sweet time. There we go. Gold falls on firm dollar. Spotlight for Fed rate decision. Amazing. I love to see headlines like this, especially when I'm already looking for a sell. That's my favorite kind of a headline to see. That's why with the buys, I'm going to hold off on the buys for a bit. I might even just tell myself that I'm okay with missing the buys for now. That's what I've already told myself. So that way I'm going to avoid getting stuck in fake outs and give myself the best possible option to catch a trade. Because you think about like the amount of bullets that you have every day in your gun, you're not going to have all the bullets in the world to just keep spraying. So you got to make those bullets count. Imagine you're getting chased by a herd of zombies, Resident Evil style, and you get pinned up against a wall and you got only a few bullets left. And you got one zombie to kill. Man, you got to make sure that zombie comes close to you. You're not going to shoot him from far. You're going to shoot him from far. You got to hold your cool. You're going to be scared, but you're going to have a better chance of killing him if he gets closer to you. Then you shoot him in the head, point blank. That's what trading is. Because the market is just one big zombie trying to take your money. Price is moving down. My broker actually looks slightly different. I see it's starting to break here. Gotta move it like maybe somewhere around here. Five minutes also getting held down currently by the 8 SMA right now. So we got a kiss of death confluence on the 5-minute time frame. It's still trying to respect those lows for now. But I believe it should be rolling over soon. It should be rolling over here and breaking the low soon. Delta is also looking quite good. We could see a little bit more activity though. We're just now negative 360. NY open has not yet had its move. So keep that in mind. We're still ranging. We have not yet had the move. Looks like it's still kind of whiplashing within this range here. It's like about just like a 57 pip range. So gotta wait. What to do when market activity is slow on order flow? We will wait. I think just because we also got a pretty important level over here though. It's that hourly support. See if we can break through it. Actually, if we break through it, we're gonna have a wick fill and then price to keep moving down towards 4K. Oh, that's actually why it's such an important level. This is right here by the 4K mark. 4K psychological. That's why it's taking its time. It may take a little time over here before we get through this level. It might flirt because I see that's the last support. Here it's on the hourly time frame before we got clean range to just keep pushing down. Okay. Yeah, so that means once I get that entry confirmation and price decides it wants to move, this is going to be the inception of that move. Because now price can potentially move from this area here and target 4K. So get stuck in properly. I think this could be a real bumper clot. Because price action is already moving down. Right? It's already moving down. Creating new lower highs. So that's going to be the inception break. Anticipating that's going to drive this to 4K. So remember, don't forget about these levels over here. Lower high. This is just another lower high in the grand scheme of things. Let me read Discord. Why didn't you sell when it broke the low there? Because I'm still waiting. And it looked different on my broker, if you recall me saying. The structure looked a bit different there. The best thing to do is just wait. Just wait. And plus the order flow is not as appetizing right now. It's not screaming jump in, you're gonna miss it. It's screaming more like slow market activity. Look at the bubbles, I guess. Look at the way that the bubbles are coming out. It sounds funny to say it, but this means low activity. You will see the difference. Just wait. Just wait. You will see the difference. Because right here, you can tell that not many people are getting involved in the market. It's quiet. It's still quiet. How can I get the bubbles on the screen? Oh, you gotta go on ExoCharts and download the software. This is ExoCharts program, and then you get DX feed, which is now the data from CME Group. So the data is like $39, and the software, I forgot how much the software is. We run like a really good giveaway. I think like was it 2 months ago? Because I took a month off basically trading. We were giving out, I think it was like 6 months free for the software. I recently saw that you can actually get promo codes for the data as well from DX feed. I'm just not sure where to get the promo codes from, if I got to contact who. But I want to get some promo codes on this data. Very little volume? Yes. Very little volume. You see right now Delta is bullish. Although I believe we can still see some potential sells. Very little volume on the open. So if you go on the kill zones here, you can see it. So basically this is what's happened, right? Since the New York session opened, here, look at this. Where has price gone? It's gone nowhere. It's in like maybe like a 70 pip range since the New York session opened. So again, that's why I'm saying NY Open has not yet had its move, right? And I think that NY Open move gonna be a real bumper clot. That's actually what I'm here for today. That's what I'm here for, because I want to see price. Oh, because it's breaking the high here. I wanted to see price break the low and target a 4,000 psychological. That's what I wanted to see. This is the mark that I'm going to be anticipating for price to come down towards. That's what I want to see. That's what I've been anticipating, I think, since basically last week as well. So we gotta wait. I think right now we're just looking at a potential correction here on the hourly. That's the only thing that makes sense to me. But I feel like it's a short-term thing. Just like a short-term best and then roll over. Just because we're at support. And remember, that's the whole idea behind trading. You see, this is a defense area. If the buyers give away this defense, it's going to be easy pickings for the sellers to fill that range to 4K. So I think this push up here, it's more of like a fear-driven push more than I'm actually trying to move up type of a push. So we'll see. You took that? Nice. Yeah, I'm okay with missing on the round of buys here, as I just noted. But I think that was a pretty good push. How many pips did it do? About 25. Nice. You're going to start to see a reaction. Potential reaction around that 20 pip mark. So you want to be careful. So if you took a move here and you got stuck in nicely, secure something. Take a partial. Alright? Secure something or manage your trade at break even. What are your thoughts on the morning price action? Bearish. Price moved down. I think it moved down quite nicely over here. If you look at the kill zones again, this was you had the sell that happened, but it took some time. This was like about 2 hours and 30 minutes for the actual break. London was a little bit choppy, but yeah, for some reason that volume, it came in like a little bit delayed. 2 hours 30 minutes for the smooth move to the downside there. Let's see, I wasn't on the charts this morning either. I wasn't on the chart for pre-London, Asia. I wasn't on the chart for London. I just got on right now. So we're still kind of like feeling out the market. But for me, it looks heavily bearish. already being down about 1.10%. It looks heavily bearish. So just coming onto the charts this late, I've already been seeing sometimes when I look at TradingView, I don't even do analysis. I just throughout the day look at the daily change. Right? So I'd already been seeing throughout the day where it'd been down already -1%. So I was really looking forward to a clean sell idea. A nice sell. Just like yesterday's trade. If you were in the stream yesterday's trade, you should have seen like the sells that we took towards the end of the stream. Beautiful accumulation. Made around like how much was that? About 5.8% on that move yesterday. That was my biggest move of the week so far. Let's see, world stocks hit 1 month low as chip worsens. Let's see if New York session is going to be a buy, it seems, for the open. What a crack, 40.30. It may still just be trying to retrace up for a bit. Right. Nice consecutive breakouts though in the first round. The first breaks out of the inception, which is right over here. Now we wait. What to do? Wait. Now we wait. Maybe I should have taken a buy. Actually, looking back at it in hindsight, maybe I should have just planned for the buy right here. I got such a heavy sell bias today. Maybe I should have taken a buy. Miss this move here and then execute the buy here. Let me see how much did that push. That was only about, yeah, just about 20 pips so far. Ooh, wasn't concentrated. I was too focused on the sell there. Alright, let me wait. Let me wait. I might get a structure over here form and then look for a sell from here. Down, bearish. No big deal. You never miss a move. And also in a situation like this, because price is also creating overall structure to the downside, that I might just end up getting the better sell. I might actually just end up getting a better trade. You see now it's coming back down. I might just end up getting the better trade. Sure, that would have made me money. But I'm seeing the way it's moving. I may have secured something already by like 2%. Maybe somewhere around like 2%. Because it's not spiking with like too much volume. I'll most likely close like 2%. So I'm going to pay close attention to how the market structure forms here. Because NY Open just opened, right? It tried to have its buy. We're still in relatively like a safe area. This is still like the inception. Even if it still wants to continue to move up bullish, ideally it would create like some structure here. If it can give us the luxury of a bit of structure before the move up. Correct? But right now it's in distribution. You see as price is moving up, it's trying to fill the hourly range. Right now it's in a distribution. So we gotta keep monitoring this, because we even in terms of the order flow, I'm not seeing like a super aggressive market participants just yet. You know, sometimes when it's really aggressive, this thing even bends. Like as price starts to come in like this, it kind of bends a bit. If y'all have noticed that before, it kind of creates like a small L shape. There's so many orders coming in. So that's what I'm thinking. I'm just sitting on my hands and anticipating that this could even be a fake out right here from this level. Because as price breaks above that zone, sometimes you get like that reversal confirmation like this. So let's see. Let's wait. Smash the like button. Enjoy the stream. Have you noticed when the news in TradingView says the market looks bearish, the next few hours price might go bullish and opposite? There's a probability of that happening. I wouldn't say that it's always gonna happen. I'll say for the most part, like they're just telling you good macro news. Like they're not wrong. Price is down. Price was moving down. It's just the timing that's the thing, you know. But like they released their most recent headline here, like maybe 10 minutes before the New York Open. Like literally anything could have happened at that point. Nobody knows for 100% certainty whether the market is gonna go up, especially not TradingView. They're not gonna know 100% certainty whether like price is gonna go up or just continue shooting down. They might have even been timing it for a bearish continuation too, which also just made the most sense. Because that's why I'm also looking at where I was doing my analysis here overall. I was expecting more that the New York session would move down, but I kind of understand why that it's pulling up, just mainly because of this last support area here. Maybe the buyers don't want to give this level out too easily. So they're actually at the moment trying to protect it. That's why we're also getting a retracement, because remember we also had sells that happened earlier here. These were the sells that happened into London session when price started breaking the lows. Remember, this is the distribution. So price came down. It hasn't really retested. That's the thing. It hasn't really retested these highs yet. So it could be looking to balance out a few positions before it continues going down. Because they've been left in the profit over here for like a really long time. You could imagine even something like this, even with like a tight stop loss. Correct? Because you know the whole idea behind this thinking is because we've all taken trades like this before. You know, it could be an amazing trade like this. Let's say we're being super greedy. And then what happens? The moment that we feel that price starts to move against us like this, most of the time what happens is you get stopped out, correct? When we see it start to struggle a bit like this, like your position would typically gonna get stopped out. Price will fluctuate a bit and then continue to move down bearish. So that's what I think it is. It's more of like a retest of levels before maybe a reflip and a continuation to the downside. You can even see it here. Look at this. Look at the way we're just even tapping with so much accuracy within this level. So that's like a similar idea, right? Where your entry point would get tapped like this. And then what happens usually afterwards? Price continues in that direction. And if I'm going to take like, I'm thinking on taking like one shot. Chat. I'm gonna take like one shot for the stream, so that's why I'm really just waiting for my sells to play out over here. I'm waiting for my sell confluence. Typically I'd already be on my second or third trade for the day here, but this is gonna be my first trade for the day, so you know, I'm gonna take one shot. I kind of want to take a shot in the direction I think I'm gonna have the best possibility for a good push. I think that makes sense. Can I make clips? No, I'm not currently doing clips. We were doing clips before, but we're not doing clips at the moment. I'll let you all know for sure when we're doing clipping again. Would be nice to have 5-minute shotgun as confluence. The only negative here is the 1 hour support below, but for 20 pips should be good. I actually have a setup for the move up, but the SL is huge. I feel like the move up, we could have taken that little TFX entry confirmation, right? There was technically one there. I'm not denying it. There was a move for the move up, but I feel like that move up is just not the main event. I feel like the move down is the main event. That's why I was like, I'm okay with missing the first round of buys for now. Maybe unless we start creating more structure up like this, then I'll entertain the idea that price is no longer going to be moving down. And then say, okay, you know what? Maybe I'm better off just taking a buy. The main event has yet to come. Thought I could take a sell here, but I was missing a few confirmations to take an early sell. I have to wait a bit longer. There was not enough structure there. Patience, my friend. In 26 minutes, it will be showtime. Yes, I think so. I'm gonna wait. I think I'm just gonna wait. Look at this. You see now the difference? Look at the difference now on the order flow. Look at this. You see that? Why is that happening as price is moving down? Because that's the main event. That is the main event. It's the sell. Until we start to create structure. Until you see this is a new high that's been formed, right? But that's all it is. It's not a higher high. So the market is not showing us that it's shifting yet unless it does something like this. And then it's going to start to create new higher highs. Then that would be a higher high. For now, this is like a high, but it's not a higher high necessarily. That's why sometimes people rush into positions too quickly and think like they've caught the bottom, and then only to find out that that was just maybe like a spike or liquidity grab to keep moving down. No confirmation, no trade. But I'm looking for sells, chat. I'm looking for sells. Sell. That's it. Unless proven otherwise. We've been on stream here for about 1 hour, 40 minutes. And still waiting. Still waiting. So in the meantime, get some water, drink a cup of water, and relax. The main event has yet to start. I see 4K getting hit. Once we start to crack these levels down here, curtains, bomber clot.
Bomber clot!
And it's just a probabilities thing. If price has been down 1.20+%, then there's a higher probability for sells, at least now. Let's remove the equal highs. This is a lower high overall here. Three on the line. See, sometimes you gotta be okay. You see this? You see why I wrote this? I'm okay with missing the first round of buys for now. You see this? Being okay with missing moves is the game changer. Some of you jump too quickly. You jump the gun always too quickly. Just be okay with missing moves. You gotta be kind of like picky, you know. It's okay to miss moves. It's part of the process to miss moves. When you're sleeping, you miss moves. Because if price comes back down here, essentially we've come back into the range. And this may become the potential liquidity grab. So I would say the best case scenario is if we keep pushing down at this point and not retrace up. Because if we retrace up, it's going to take more time for price to set up the sell again. So the best case scenario is if price just starts moving down right now, because if price starts moving down right now, that's going to confirm pressure. It will confirm pressure. So we want to keep the pressure on, right? So it's like when you're in the gym, you also kind of want to keep the pressure on when you're in your 9th rep, 10, 11, 12, like you got to keep the pressure on, you know, because that's where the real progress is made. That's why I'm hoping like this area here, that the sellers keep protecting this zone. They keep the pressure on, because when that pressure remains, we'll have a better shot at seeing 4,000 psychological. But if it starts retracing up now and all that, it's going to take a lot more time. It's like it would take more time to build a muscle. If you don't push to 1 or 2 reps to failure, it will take you more time. Hey, Mr. Rashid. Good afternoon, good afternoon. Welcome, welcome. Viciola said, keep your chart work clean. I'm not used to all these texts. Oh yeah, I mean, this is just for demonstration purposes. We know exactly what we're waiting for here. But you know, the problem is when you don't have this, then it's a naked chart. You see, look at this. It's more of like a naked chart here, and then it's harder to understand. But sometimes when you have it on, it's like, okay, yeah, this is a small reminder that what I'm waiting for. The real question here is Trump looking for sales too? Yes, I hope so. Because if it doesn't break now, then it's just going to be a pricing in. For maybe a Trump tweet later. Maybe Trump wants a better entry. So he's saying, oh man, gold's already down so much. How about we have a move up and then have the move down? Then you get a better entry. Let's see how that 1 hour is behaving. Still trying to hold. See, this is going to be an important area for downside pressure right here. Once we retested that wick, we also got that 8 SMA that it's currently catching up to. You can also see that the delta just flipped. That's not an accident. Delta flipped all the way from 1 million. So I would say the market is kind of choppy right now. Delta flipped all the way from 1 million down to negative 6.4k. So I would say we're a little bit choppy right now, because typically that doesn't happen. Typically, if we're even up that much, it's most likely staying at that amount for the hourly closure. But you see that hourly candle here? It's kind of like flipping. It's still a bit of a doji. So we're gonna wait. We're gonna wait. We're gonna wait. Man, I haven't taken a trade today, chat. I haven't taken a trade. I'm gonna take a good trade. If I'm gonna take a trade, I want to take a good trade. What does Delta moving down 1 million mean? It means there's a lot of selling pressure, like a lot of aggression in the market. So Delta is basically aggression. It's also a good way of seeing absorption, because if you see the candles moving up and the delta is moving down, then that means the buyers are getting absorbed. Where do you find the delta? On EXO charts. On EXO charts. We're coming back up to test that previous liquidity grab area. Let's see how it reacts there. Right now 148. How much have you made in the past 1 hour? Nothing. Nothing. Just waiting over here. One and done. Nice one, Abdi. I got a feeling this is going to be like one of those days where there's going to be a big move, but it's going to come later. I think it was a similar thing that happened with yesterday's range that we're looking to get filled. Although we managed to get away with like a small little breakout situation right here. We took this little play, that little sell. It was a scalp move. It pushed around like 52 pips before retracing up. But I think like that bigger sell move, it was waiting for next day Asia session. Because see, that was that range. Oh no, actually it filled the range quite nicely there eventually, but it pulled up first. Taking out these highs and then it pushed down. But you know, ultimately we wanted to see that this level here was going to get like a much cleaner move. So we wanted to see this happen. Delta is back at 440. Let me see if do I want to take any sells? I mean buys. You know, the thing I'm looking here at a potential buy is a shotgun play here. I just don't like the way that price is still within bearish trend. So you even see with this shotgun play here, then it came down. Like every time it creates a new high, you can see here it pulls down, a new high, it pulls down. So the only thing I'm cautious about is the fact that this next candle could open, try do this, but instead maybe push and then come down. And then in that sense, it's just going to trickle like this. It may fill the range, but it may feel it trickling due to how price has already been moving here. That's the only thing that I am really contemplating, because the market has a funny way of making you wait for a move that you didn't initially plan to take, and it squeezes you till the very last moment. You take that trade and then it gives you the move that you'd been waiting for. And then you end up telling yourself, man, if I just waited just so little, just a little bit more, I waited, I would have avoided that. kind of baiting, you know, it's like you get baited. I haven't had a no trade day in a very long time. Like on months that I'm actually trading, I haven't had a no trade day. But I think I can catch a move. Maybe catch a move now or catch a move later. But I think I can still catch a move today. It might just take a bit of time to set up. Because I see with the New York session, it's rather pushing up at this moment than moving down. Activity is also starting to look a little bit healthy too. I'm gonna monitor for the last time just this next 5 minute here and then decide what I'm gonna do. Right? Because I want to see if that next 5 minutes is gonna do what its buddies did over here, where it pulled up and then pulled down, or whether we're gonna close it and then keep pushing up. But I'm expecting that it's gonna pull down heavy soon. It's gonna do something like this. It's just baiting people. Then it's gonna pull down heavy and take out these lows. It's because we've been moving down throughout the Asia and London. That price needs to price in a little bit, I think. But you're gonna see a big move down here soon. That's what I'm expecting. Alright, be right back, chat. Are we commencing finally, Goldie? When is the main event gonna happen? Still waiting. Now that's looking a little bit of liquidity grab on the 5-2. I just took out the high there. Oh, nice. Entry on the LTF is like brain surgery. It's just the same analysis you would do on the higher time frame, except like faster. That's it. So that's why we say it's like tying a shoelace. If you're gonna learn how to tie your shoelace faster eventually, right? Where you don't even gotta look anymore. So the higher time frame plays are like looking as you're tying your shoelace. The lower time frames are like you don't gotta look anymore. I'm not seeing an entry yet. You can remove this as a lower high for now too. This might be the new lower high over here. Because remember, this is playing out from the higher time frame. Lower high, lower high. See, back on that gym routine chat. This app, man, it's so amazing. That's how much I've eaten today so far. Since we're still in the cut, I haven't really eaten much. How about like, what's that, 747 calories consumed? Still got about 1,000 to go. Right over here, see, it gives you your macros. You can see your protein, your fat, your carbs down here. Then it's the food log. That's all that I've eaten so far today. Just got breakfast over here. Got some breakfast and just a whey protein. A protein shake. Right there. And that's yesterday's food log. Man, it's so awesome. I love this app. Such a nice app. It makes it easy to eat and not worry about if you're following your plan. You know, it just takes gives you more room to breathe. Like this is gonna be like my trading plan here. I guess that's the weight from the previous quarter. Currently still moving down, but I missed like a whole month. Of journaling. And it's so important to journal. In all aspects of your life that you're trying to get actively better, you gotta journal. You got to journal until maybe you don't need it too much. Because like right now, I'm not gonna journal every single trade that I'm taking, but I will keep in mind the market condition. Like how the overall volume has been behaving, how my overall P&L is progressing. Those are the things that I'll definitely keep in mind. But I wouldn't do like a hardcore journal like someone would in the first year of trading. You're shorting? Godspeed. Not seeing an entry yet. Mind you, this is a 1 minute time frame and there's nothing. Like price just moved up basically. It moved up and then it moved down. That's it. There's no structure. There's nothing. I got a FEG. Oh, nice. Yeah, I got a confirmation. Go for it. What is the X feed? That's data from the CME group. Price arrived to discount area. That's why. Let's investigate a little bit more over here. So we got the 15-minute price arrived back into the accumulation. So initially, I thought that this would be enough of a reaction right over here. But it seems like it went for a deeper reaction. Because remember what I said. These positions here, they have not yet been retested. So let's go back on the 1 minute and see if they've been tested now. You see now they've been, with that pull up, they're getting a higher chance of those levels being tested. Of most entries from London session being tested. Because the market's not going to leave them in profit forever, right? Even if it wants to crack 40.22 and head down to 4K, it's not going to leave these positions in profit for too long. So I think that's why it had that little bit of a stretch that we're seeing. If you go on the 15 minute, you see it kind of looks like a little bit of a stretch, right? Look at the size of that wick that just pulled up into the previous accumulation. Correct? Here, previous accumulation. which is also just like a zone that you're looking at from here. Correct? It kind of just stretched into that level, taking out break evens, maybe even getting more sellers involved. So we can actually move beyond that hourly level that's currently being protected, but I think is going to get disrespected very soon. So that's what I'm still waiting for. That should be the main event. Hourly candlestick is about to close here in 2 minutes as well. You can better see here on the hourly here. Spike, 8 SMA still holding a bit more better now. So, you know, sometimes you just gotta be okay. Be okay with missing moves. I could have technically caught a buy here, but you gotta sometimes be okay because you don't actually miss a move. Remember that, chat. You don't actually miss moves in the market. The next one is right around the corner. Let's see. I got the zone in that picture. I have the exact zone. Sniper. See? Right there. Stabbing into that level. Stabbing into that level. It's not an accident. It's not an accident usually when price kind of like stabs into a level and then just comes down with like a lot of volume. Right? That's not an accident. That's not an accident. It's doing that very intentionally. The market is super intentional about everything that it does. It's just now going to be that your ability to perceive the market from that objective point of view. And you know, sometimes taking a step back helps. I remember back in 2020 when I was still learning how to trade, I would literally put my laptop on the kitchen counter and take a few steps back to see if I can see the market in a different perspective. You know, it's the same way that people invert the scale. Sometimes you can even invert the scale on TradingView to see, like, if you're not good at seeing buys and the market is moving in a bullish trend, you can invert the scale. No. Yeah, you can. How would you use that? If you're not good at seeing... oh, wait, I'm getting an alarm over here. If you're not good at seeing... If you're only good at seeing sells and price moving up, you can invert the scale. Invert the scale and then it'll be like you take your sell, but you just hit a buy. But you can do the analysis a bit better. But better not hit the wrong button, because then you're going to hit a sell and wonder why you're in drawdown. The only thing I worry about is the dollar is becoming neutral. The dollar should be moving bullish. Let's see what it's been up to today. Dollar is still a bit consolidating on the daily. Looks like a doji there on the dollar. It's getting ready for a breakout as well. You see where the dollar is lying? We have this clean range to move up towards like resistance over here. This is going to be by 104, 104, 104 even. The dollar is getting ready. Dollar is getting ready to move up. You see this with FOMO over here? I wrote FOMO because institutions are going to get forced to buying the dollar very soon. Once price starts to move up, they're going to be forced to get into buys because you have this whole area on the monthly time frame for the dollar to move up towards 110. So you're going to start seeing dollar move up like this, and you're going to start seeing gold move down like that. So again, further and further and further and further confluence, why we should be seeing a lot more selling action on gold spot gold. There's our hourly. No, this is our weekly flip. Stay with me. You know, the thing is, if I can get my entry, I'll just have a wick fill to deal with. Or like, rather, if we start getting to entries here, there's really nothing standing in the way. we could attempt an earlier entry, but if we push through these levels here, I'd be expecting a much better push because there's nothing left. Here you still have those rejection wicks, but through this level here, all you have left is a wick fill into open water, into open space. Please don't stop streaming. I need to learn. We're getting more confluence for buys. Not yet. It's starting to create a bit of that structure though, because that's gonna create now. Still keeping the higher time frame trend in mind, but it's starting to create new higher highs. Here, this a higher high. This a higher high too. But we're still keeping the overall rollover in mind, because you know the higher time frame sometimes it's obviously gonna take a little bit more time to mature. So that's what I'm anticipating still. But you know, if we start breaking back above these highs, yeah, at that point then the structure really shifts. At that point it's like no longer am I looking so much for my sells anymore, because we just had one high, we got one more higher high over here, and we got some higher lows being formed right here. And if we keep that momentum up, then yeah, at that point then something is definitely shifting. Because now I'm gonna be running out of what do you call, like, cards in the deck of ideas of why that price was moving up in the first place. So the last card in the deck was just a retest of this area. So if it starts to move beyond that point, I don't have any further argument really about buys, because that's it. That's the last kind of like holding point right here. Oops, let's remove this. That's the last holding point right there. If you see a good trade but the delta says otherwise, do you get in? Yeah, I will still get in. It depends on the confluences and the type of price action, you know. Sometimes, you know, the delta is an indicator, just like any other indicator as well. So sometimes it can be lagging. You know, most indicators are like lagging indicators. So sometimes, yeah, you do require some entries that are against delta. This is just a tool. That's a tool, but your intuition, your experience, and the way you understand your instrument is generally like overall, which gives you like that edge as a trader, you know. So you're gonna be able to take impulse entries where other people might not take impulse entries, and make money where other people might be fearful. It's definitely a luxury if that lines up with the entry confirmation. So you see right now it's a bit more bullish still, and we just got a new hourly open. So I'm hoping this new hourly, oh, the previous hour actually closed bearish, negative 500k, and we're still trying to push up. That's absorption. So if you see the way the previous hourly here closed, we pushed all the way up here, it came down, it closed negative 500k. That's absorption. That should be an absorption signal right here. We should be seeing the rollover. I think today it's just taking a bit longer. It's taking a little bit longer. Sometimes we get the trade like literally in the first 1 hour stream, or first 20-30 minutes of the second hour of the stream. Right now it's the second hour, and for me personally, I haven't seen the actual New York session move yet. There's just a little bit of choppiness, a little retracements here and there. So yeah, gotta keep monitoring. We just got to keep monitoring. Because I'm seeing good activity as well. Here. That's looking quite healthy. The buyers are just really freaking protecting the hell out of 4022. Because they know. They very well know what's going to happen here. They know what's going to happen here once we start pushing more down. So they're just enjoying the wasting of time. But eventually, we will take 4022. We will take this level. And once we take that level, curtains down to 4K. It will be ours, buyers. You're just wasting time. If anything, you're just getting absorbed, right? You are just getting absorbed. Unless Trump comes out and says something like, oh, you know, we came to some kind of an agreement with Iran and we're going to hold hands and be happy now. But, you know, what's the probability that that's going to happen, right, guys? What's the probability? So, you know, it's a scary position to be in as a buyer because you see, look at this on the right-hand side here. You see this? When market creates this kind of a structure, look at all the support. You know, as it's trickling up like that, it's creating a scenario where that when we start to melt, we just blast through these levels. Where you might think that there's actually a support, it's a false support. And then price just starts moving through it like butter because it's a false support that's being formed. Correct? And that's the real move for the day. Why it's not yet happened? I think it's building orders. It's building the game plan a bit more. Hey, Architect, nice to see you back. Where have you been, sir? Where have you been? Just got in now a bit earlier than planned. It dies, it dies. Very good. Dies, it dies. So we're trading now our emotions and no longer our plan. Do you have only each time you eat? Yes. I've been in and out lately, missing you lads in the London. Yeah, I miss you too, man. I saw Rainsy in here today. I saw Space Angel yesterday. Nice to have some of those OGs back. Buy a McLaren cap, it suits you. Yeah, people say it looked like Lando Norris. Lando. Yeah, that'll be sick. You know, McLaren is the best, cheapest car that you can get if you're looking to get like a luxury car like that. Like a sports car. It's the McLaren. I'm not sure which McLaren it is. Wait, let me see. McLaren versions. I'm not much of a car guy, but it's this McLaren. I think it costs, how much it cost? Like, how much it cost? Something like 80K or something like that. Entry level. I'm not sure if it's this exact one, of course, you know, but it looks like this. Obviously, that classic little McLaren look. It looks like a McLaren. I'm just not sure what version it is. It's like an iPhone. You know, if you look at an iPhone, can you tell, unless you really know what you're doing, like, can you tell what version it is? You know what I mean? But yeah, it's a pretty nice car to get if you want to get an entry level sports cars. Schedules us need to line up. Facts. I thought it was a Ferrari, but I think Ferrari have a lot more maintenance issues. Damn, Daniel. All right, so New York session's kind of dead. We've only pushed like from NY, from this low to that high. It's like 148 pip range. But I know the moment I leave stream, this thing is going to stop moving. It's always like that in these scenarios. It's always like that in this scenario. Man, the moment I leave stream, I know this thing is just gonna melt. I can feel it, but I don't want to wait 46 minutes for it. Because you know, this hourly candle here, it might still need a close. It might just close bullish for the next one to open up. Because remember, the higher time frame is still in play. This could be the Fibonacci play on the hourly. Because you got the high right over here. You got your high and you got your new lower low that's been formed. Right, and that's a retracement into the fib zone. Got a new low low on the LTF. Retracement into the fib zone for the next candlestick to do something like that. But that's why I'm kind of hoping like this candle can start moving. Because I'm not gonna wait 45 minutes. I'm not gonna wait 45 minutes. Oh, the cheap ones are around 195, 570s. Best sports car is Porsche for sure in terms of cost and also maintenance. Yes, Ferrari just maintenance price is crazy and a lot of problems. Oh yeah, maybe like 80k is too far-fetched. Yeah, something like 150 and above. But it looks sick. It looks really cool for that price. A lot of traders get that car. Like I've noticed, when they start making money, usually it's a McLaren, right? And then they build up from that to the SVGs and all the other stuff, Uruses and Rolls Royces. The Cullinan. Gotta get a Cullinan. Thing is huge. It's like driving a boat. A sports car, probably not comfortable for like daily drives. Can't go wrong with a good Range Rover or yeah, I think like Range Rover is pretty comfortable. Remember Hummers? Back in the days when we used to see a Hummer on the road? Hummers used to be so cool. That yellow, it always used to be like yellow. But I never really saw the inside of a Hummer before. It's just weird. I always saw the outside. I think a G-Wagon would be sick. Just for closing the door. I would love to have a G-Wagon, you know? Just to close the door and just hear the click. Click, click. But I'm not really much of a car guy, but I think like that would be the most ideal daily driver and etc, you know? Very nice. All right, chat. This is taking a while, so I don't know. What am I going to do over here? What am I going to do over here? This is getting boring. Look on the right-hand side, what we're dealing with. Look at this. Does that look appetizing? It's consolidating. It's wicky. Lots of wicks. It's compressing. Doesn't look too good. Give them homework. Yeah, what are we going to do with homework? I want to take a trade so bad. I want to take a trade so bad. I wanted to take a trade so bad. But it doesn't mean that I'm going to force myself into a trade. I got a plan. Stick with me. I got a plan. I got this one guy. He's like a mentor to me. He's not a trader or anything, but he's like a life mentor to me. And this guy, man, he's so, I would say, for his age and everything that he's accomplished, it's pretty impressive. And he's got three Mercedes Benz, and he doesn't even have a driving license. So I just find that funny. Bro's got like the best cars, but he's also such a humble guy. But he's never done it. He doesn't have a driving license. So whenever he's around, like, he normally either gonna have someone drive him around. He's also young. He's like in his mid-30s. He's gonna have someone drive him around, or he's just gonna use a local transport. It's just so hilarious to me. He built like this massive mansion. Bought these cars. He owns horses. He doesn't have a driving license. But it's pretty cool. Very cool guy. Homie, she just want the funds. I think a horse is like $10,500 if you want to get a horse. We're like entry-level horse. Probably get a horse for 10K though, to be fair. Hey Cougar, thank you for the sub. Welcome to the squad. Yeah, man. It looks like we're getting a slow New York session today. I think this is a good time not to trade. Everything's telling me not to trade right now. Because for me to take a trade, I need to see direction via pushes. So I need to see price either do like a big, you know how New York moves, like a big move like this and then get that direction, or like even a big move down here and then start to get that direction, and then I'll be able to say with a bit more certainty that volume is back into the market. But if we keep making these like smaller moves, they're not really appetizing. You see, like even a move like this from here to here, it's not really that appetizing because it's not really doing much. It's not moving with much intent, especially because this has been a counter trend move. But if we get like another move right now, especially start to come down heavy like this, we know the volume is in and it's just like a delayed firework. So that's what I would suggest, is wait for the market to reveal its hand first, whether it's going to be up or down, before feeling any FOMO. Remember, be okay. You see, like today, I'm okay with missing moves. I'm okay because I can see that overall we're not doing much. So just be okay, because the last thing you want to do is like get whips. You don't want to get any whips. You don't want to get into any fake outs, right? So rather just wait for the first move to first show its hand and then you get your direction. But what I would be looking for is exactly that first, like a little bit of a push. I still want to see this level here get cracked, ideally. If I just so happen to get off stream right now and then you see price start to move heavily, that's what we're still looking at. We're still looking at 4K and this range here on the left hand side to get filled. So that's overall kind of like my main idea. For buys, if we keep pushing up with volume, especially with volume, then we can entertain the buy idea a bit more. But for now, we got to stay away from this chop right here. So you can see since the New York session opened, this is basically what we've been dealing with. Sideways movement. So wait for those confirmations, guys, and then I think it's either that or come back tomorrow. Tomorrow is another day. Still trade tomorrow. But I think I will see you later. I will see you tomorrow, New York session, guys. Take care. Don't overtrade. And adios.